Alright, it was July 1st, and this is the video like takes 30,000 to a million. I'm going to take you through the account and talk about some charts, I have some graphs, talk about inflation, deflation. It's going to be cool. I learned some new things, so I'll show you after I review the account. So let's go into it, shall we? I'm at 177,300, which is a very good day, considering lately the performance of the markets as of late. I'm beating the market by I think more than double. Let me see on the day. SPY is up a little bit over 1%, so I'm tripling the market today. It's very good news. I needed that, especially since on the downside I basically double the downside, so it's good that I'm tripling the upside to kind of make up some ground. So the 1 week performance ended up being a negative 3%. 1 month is flat. 3 months negative almost 10. 1 year is almost 1%. The SPY on the other hand, fine. I'll show you the all-time chart. But you have to know, started investing here in August 28th, 2018. Okay, so keep that in mind. That's why it's so flat before that. Okay, and now the SPY on the day up 1%, week also negative. It did better than me in the week, which is disappointing. 1 month, it did considerably worse. 3 months, considerably worse. Well, by like 6%. 1 year, I was up 1%, right? So definitely killing it on the year chart. That's nice. And this is the 5-year chart for the SPY. By the way, this looks really bad. It looks like it's going to continue. It does not look like it's heading back up at any rate at all. So expect a negative week next week. I'm getting a lot of my capital back. So you can see my buying power is back up to 107,000, which means that as the market crashes, I'll be able to sell some more puts and try to perhaps get even more Paramount or Goldman Sachs or whatever stock I decide is worth it at the time, perhaps even Apple. Now, I'm going to take you through all the positions. Apple had a good day, actually. I'm going to take you through all the positions and then go to the investment tab, and then we'll talk inflation. So these are all the option plays. I don't have many running at the moment. There are not many left since a lot of them expired today, thankfully. I didn't have to exercise any of my options, so that's free money, but it wasn't that much. It was like $200-300, so small victory, but I'll take it. It's hard to get a victory nowadays, you know what I mean? So these are my Chinese ADRs here. I don't have many left, but I definitely have 3 Alibaba 140 calls for 2024. And I have the JD calls, 4 of them, for 2023, January 20th. And then I also have PayPal, a couple of calls for 2024 as well. Hopefully that materializes something good. These are the equity positions. By the way, feel free to pause the monitor. I can't pause the monitor. Pause the video player at any moment to try to figure out the exact position. So Apple had a great day, up 1.7%. Realty income, 2.7%. Just huge updates from my positions. Main Street Capital up 3%. Goldman Sachs up 0.6%. Paramount 2.5%. Smith & Wesson 2.8%. I need that thing to go to 15. And Didi is just 10 shares, so it's insignificant. I don't know why I'm keeping those. I guess I'll sell them soon. I don't know. It's only 10 shares, so it's like $31. I'm up 74% on the position. So if I had put a significant amount of money in there, 74% win in like a few weeks would be great. Thanks very much. Let's go to the investing tab. So my margin was reduced a little bit, so I'm now at 72.8, 72.79. So I have some space to work with, thankfully. These are the, well, let me give you the number. I'm still 101 over $101,000 borrowed, so it's still a lot. If I get rid of the Goldman Sachs, if that goes up a little bit, or Paramount or Smith & Wesson brands, or all of the above, I'd actually be margin free, I think. I'd be ready to dip my toes in again. So stocks, by total return, Apple Realty Income, Main Street Capital. By equity, Apple, Goldman Sachs, Main Street Capital. Main Street is now my third largest position. This thing alone is giving me over $200 in dividend each month. Not each quarter, each month. So, very nice dividend by Main Street Capital. I could have just clicked it from there. But, and also they gave me some bonus dividends. They give bonus dividends if they have too much money at the end of the quarter. So I got a $70 bonus dividend on top of that. So you can spread that out over the 3 months. That's like $23 extra. So $223 per month at the current rate. It's very good. Very good. You can see here the dividend yearly yield is 6.53 on the current price of Main Street Capital. Alright, that's the account. It's doing great. Now it's time to talk some inflation. So I was just listening to, ARK Invest's Kathy Wood. She came out a video just like a couple hours ago, and she was talking about how she thinks everything's heading into deflation. And she could be right. Commodities are the leading indicators, things like copper, gold, things like that. So the stock market. So I definitely am on the same page that we're going to be experiencing some deflationary forces here. But I wanted to look at inflation because that's kind of the overarching theme. And food and energy are not going to go into deflation very quickly. So what I want to do is look at some charts. So, well, let's go to the visual stuff first. So this is inflation, 12-month percentage of change in the United States Consumer Price Index, May 2022, by expenditure category. So what I wanted to highlight here is where this inflation is coming from. So if we were only oil consuming beings, right? If we only consumed oil for energy and food and everything else, then we'd be experiencing 75.9% inflation. Let that sink in for a bit, right? 75.9. So that's basically the major source of inflation. But let's not stop there, right? Let's go to the second one. Gasoline, which is what? Same thing. 48.7. So these first two are basically in the same category, right? Energy. And then the third category, which is 19.4, is transportation. Now, tell me this, riddle me this, Batman, right? What is the primary cause for increase of transportation cost? Fuel cost. So, these three are basically in the same category. It's oil, all right? It's oil, energy. What about this fourth one? Energy, services, electricity. Okay, here we have a little bit of divergence. According to this graph right here, electricity in the United States, where is it? Is only 3%. Oil is responsible for only 3% of electricity in the United States. But it could be other, hydrocarbonates that are contributing to it. So anyway, this is partially, the fourth one is partially from the other top three as well. So now we have like all the top three and part of the number 4 highest inflation contributor in the same category. Food and beverages. Okay. All right. Okay. 9.7%. right? Food and beverages, that's not energy. Or is it? Okay. What contributes to the cost of food? One of the major costs of food is actually getting it delivered to the appropriate stores, whether it's to the store, whether you're getting delivered to your house, whether you're processing it. What does that require? It requires oil, requires energy. Okay. So food, this whole increase, in my opinion, can be contributed to the rising prices of energy. All right. So food and beverages, part of the top category for the most part, in my opinion. Obviously, that's a somewhat controversial take. Now, finally, 1, 2, 3, 4, 5. The top 5 are contributed to due to energy costs, especially oil. And finally, we're reaching. Wait, is it 5 or 6? 1, 2, 3, 4, 5. Okay, number 6, all the way down the list at 6.9% inflation, which is not that much, right? Well, it's still a lot, but still, 6 point relatively to the other stuff. So that's housing. Okay, so housing, it's not really but you could make an argument, right? You could say 6.9%. Okay, all right. Well, how much of housing is contributed by energy, right? If you want to build new houses, you got to do what? You got to transport all the material to your location site. Well, how much is a 75% increase in the cost of or what was it, 20% of cost of transport, 75% increase of your oil? How much does that factor into the building of the actual house, right? So in order when it costs more to build a house, then the houses that are in existence will rise in price, right? Because there's less supply. So constricting supply will cause the prices to rise if the demand stays the same or increases, and that has been happening, as we know, due to the virus. Everybody's been trying to get out of this. Not everybody. A good portion of people have been trying to get out of the city, buy houses, me included, right? Somewhere else outside of busy streets. Streets and cities that are less chaotic and less dense. So that's been a trend, and so part of that, is due to the virus, and that will subside. So housing, I think, is temporary. It probably come to a freeze. The price of housing. A lot of experts are predicting that it's gonna go down. So housing, transitory. Okay. And then let's look at the rest. Rent and primary residence. Okay, up 5.2%. Now we're getting some really low numbers, relatively speaking. I mean, that's not too much different than what's been going on for the last 20 years. Apparel, 5%. Okay, that's interesting. Recreation, all right. Medicare, sure. But this stuff, honestly, these last categories have been the same for the last 20 years. Okay. Healthcare has been going up. Housing's been going up, rent's been going up, Medicare has been going up. In fact, I think more than this. Medicare has been going up crazy, during the last 10 years or so. 3.7 seems awfully mild. I don't even believe that's this low. Other services, education, only 2.5%. That's deflationary when it comes to education. Have you checked the cost of tuition to all these colleges? That's crazy that it's only increasing by 2.5. Communication is minus. Now we're getting some negative stuff. Computers, smartphones, etc. minus 1.8. That's to be expected. That trend's been in place for 30 years. Price technology has been coming down. So basically, what we gather from these bar charts is that pretty much all of the inflationary pressures that the world is experiencing is due to energy prices, especially oil price. That's the conclusion. I mean, you walked me through it. Tell me how I did wrong, how I made it wrong, right? What I did wrong. So let's take a look at some countries with the highest inflation. Venezuela. Actually, before we go to that, that's for entertainment. Let's put it right over here. Next to segue into it is the WTI crude oil price from 1976 to 2022. Here's an interesting correlation, right? 1998, economy's absolutely booming, blistering booming, like crazy boom. 98, 99, where oil was like 30. 2001, 2001, oil went to 30. Market crash brought oil price down. All right. How about this? All the way up. This is the housing boom here. Oil price climbing. This is inflationary pressures around the world going nuts. In 2006, 7, and then in 8, oil reaches a high of 99. Crash. Deflationary crash. Back down to 61. But the thing is, that was just a demand crash, right? Because the stock market crashed, the demand really withdrew. Everybody, a good portion of people lost their jobs. It was an absolute economic wreckage, right? But the thing is, the supply issue wasn't solved. It's not like there was a bunch of supply back on the market again. So oil price kept increasing. And during that time, let's take a look. So 2011, 2012, 2013, 2014, that was a very subdued rise in the slow in the stock market. And then 2015, 16, and 17 were actually very good years. And look what happens when the oil starts going up again. We had that 2018 episode. And then 2019 and the beginning of 2020 we're doing very well. The economy and the markets. So it seems like I'm not the first one to find this out, but it seems like there's a really high correlation between oil prices, energy price, right, and how prosperous the people are finding themselves in the economy and in the markets in the United States. So I thought that was extremely interesting. So if you want the economy to do well, if you want the markets to do well, companies to do well, pray for the lowering of gas prices somehow and oil prices. All right, now that we got that point out of the way, let's take a look at this chart again. Oil, the distribution of oil demand in the OECD in 2020 by sector. So, Organization for Economic Cooperation and Development. It looks like the vast majority of oil is going into the road, 48.6. Second is petrochemicals, that's like clothes, plastics, everything. Other industry, 12.6. And then residential, 10%. Aviation, marine bunkers, electricity, retail, domestic, waterways, very low. Other fun facts here. This is the graph I wanted to show. Is this is just bonus graphs, by the way. I've totally concluded my oil and market correlation, deflation, inflation, but this is just bonus stuff. Okay, this is 20 countries with the highest inflation relative to what they did in 2021. Venezuela, no surprise here. So the blue mark is 2021, and the black is what it's expected in 2022. Sudan, 359, better than 1,588. So Venezuela completely getting wrecked. Zimbabwe, 100%, very high inflation. Again, these guys went through a hyperinflation back in like 2000 and what was it, 5, 15, I don't know. Yemen, 63, horrible. Suriname, I don't even know what that is. Probably in Africa, if I don't know it. Argentina, 48. Islamic Republic of Iran, 40% inflation in Iran. So this is very strange to me because, Iran actually is a big oil producer. Ethiopia, 26%. Angola, 25%. Zambia, a lot of the African countries are just getting hit. Turkey, very interesting. It's estimated to have a 60% inflation in 2022. So the reason that's happening is because in Turkey, their main guy basically doesn't believe in interest rates and high interest rates for solving inflationary pressures. So he's just gonna keep them low indefinitely and see what happens. It could be a good study case for economists actually, because no one in the West is brave enough to try something like that or stupid enough. Nigeria 16, Haiti 16%, Turkmenistan 15, Guinea 12.6, Kyrgyz Republic, I don't even know what that is. Sierra Leone is in Africa, Uzbekistan, Asia, Ghana, Africa, Seychelles, the island of Africa. So Africa, very inflation prone, no surprise there. Alright, this is an interesting graph. This is a bonus graph here. Look at this. This is leading export countries worldwide in 2021. So China crushed it in 2021. Exported to the rest of the world twice as much products. So this bar graph here is good reason to be bullish on China. I mean, yeah, they have a lot of people, but so does India. Do you see it anywhere on the chart? No, you don't, because it's further down. India here, 395, which is 1/10 basically of China's exports, with basically the same population size, completely unproductive to the rest of the world. United States second, Germany. Kind of surprisingly, it's almost as high as the United States, honestly. I mean, if you put Apple and then it would probably equal Germany. Apple's such a huge exporter. So anyway, that was a joke. I don't know what percentage it is. Netherlands, very surprisingly, enormous exporter for its size. More than Japan. I mean, how many Japanese products do you have? Right? Well, I guess not so much anymore, but they make a lot of cars and stuff like that for the rest of the world. Netherlands is higher. What kind of exports do Netherlands have? I guess I have to look it up. Main exports are machinery and transport equipment. Really? Did not expect that. Mineral fuels, 23%. Food, 11%. Clothing, footwear. Pharmaceuticals. Wow, I did not know that. So machinery and transport equipment, Netherlands. Really? That's strange. I guess go along Netherlands. Hong Kong, financial services, I guess. South Korea, electronics, washing machines. Italy, cars, France, everything. Belgium, Canada. Mexico, making the list below Canada here. Canada, a lot of raw resources. Mexico, a lot of precious metals, but also a lot of other stuff. Russian Federation, oil, basically. But now it's like zero, right, to the rest of the world. United Kingdom, except maybe China. United Kingdom's up there. Singapore is a tiny island doing more favors to the world than India. Singapore has a population of... Let me see how much population Singapore has. $5.686 million in 2020. So call it 6 million people. That's really small. That's like as big as Bulgaria. Okay. Singapore population, very small. So 6 million versus 1.4 billion. You gotta be kidding me, man. 1.4 billion people do less for the rest of the world than Singapore. That's incredible. That's incredible. Let's see. I don't know if we should be bullish on India because that's gonna change quickly, or bearish on India because they're doing such a bad job exporting their services and goods. Uh, let's see. What was I gonna say? Let's divide. I have a calculator somewhere on this keyboard. There it is. 1.4 billion. 1.4. Oh, whoops. Sorry. I'm just going to divide 1.4 billion divided by. So 6 million, that means 6. How would I do it? 1.4. Oh, so 0.000. I don't know how to do it. I don't know. I gave up. It's just too small of a number. What would it be? Like 1,400. Okay. 400 divided by 6. That equals 0.16. So they have like 0.16% of the population of India, and they have a higher export. That's crazy. Hashtag good at maths. Anyway, well, other countries below Singapore are Spain, Switzerland, Australia. So that's pretty interesting. That's really good information there. So I don't know to be bullish in India or not. I know that there's a lot of like uncertainty and some corruption there, and a lot of differences between all the different Indian states. So I don't want to touch it. I don't know enough about India to touch it. I tried with eBix, that didn't work out very well. All right, guys, that's it for now. Inflation, you saw how it's working out. It's all energy. All of it's energy. So energy price come down, everything else will come down. I don't know how much of that is the the manipulation, but if it was that significant amount, we would feel it in the other categories. But as of right now, things like Medicare and education are increasing by much lower rates than they used to be before. So at least year over year, in the last year, the money printing, since it's kind of slowed down, it hasn't been contributing that much to the inflation. It's really just an energy story at this point. Okay, that's the lesson for today, I guess, or the insight of today. I'll try to make some company videos tomorrow, or just at least one. Let me know if there's a company that you want me to take a look and do an overview of. All right, that's it for now. Peace out.